Here's the Elliott wave midterm and long-term forecast for October 2nd, 2012. We're actually near or at the 1-year anniversary of the bottom from last year, which I'm calling it as a wave 2 bottom. And I believe here that even though it looks like the bearish thing is 5 waves up, this is not 5 waves up. This is wave 1, wave 2, wave 3. But I believe this is at least the first wave of a third wave within the beginning of a third wave up. And here's the bearish count. I'll actually focus on both sides of the coin, so I'll be fair and honest here with my wave count. But the bear count is this, okay? This will be wave 1. This is wave 2. Wave 3 into March. Wave 4 into June. And then we're in a 5th wave up, a 5 of 5 up. That's what they think. They think this is a 5 of 5 up. I don't think it's a 5 of 5 up because I think this is wave 1, wave 2, and then wave 3. The reason why I'm calling this correction from March to June a wave 2 is because of how deep it's been, or deep it was. And the fact that on a long-term chart, when a wave 4 overlaps, they think is a wave 4 overlaps the price territory of wave 1, it's not a wave 4, it's a wave 2. And the depth of this move is too deep to be a wave 4. It actually surpassed 0.382 by quite a large margin. I believe 0.382 is around 12,600, and we touched 12,050. Again, if this is a 4, it cannot overlap the price territory of wave 1, which it did by about 100 200 points in the Dow. So if this is the case, then this would be wave 1, this would be wave 2, this would be the first wave of a third wave, and then we're actually approaching the 4 of 3 and then 5 of 3 of the first wave of a third wave. So this is wave 1, wave 2, wave 3. There's a chance that we may test 13,200 or lower, or around 13,000 at worst, or the previous 4 in the coming weeks. And we need to hold 13,200. And if we don't hold 13,200, we may test the previous 4 because I think we're in a 4 retracing the entire 3 from 12,500 to 13,650 in the Dow. So in my bull count, this would be wave 1, wave 2, wave 3. We test the previous 4 or 13,200, and then rally into a 5th wave. The 5 of 3 of the first wave of the third wave, a 5 of 3 to test 14,200 or the all-time highs. So I think we can test the all-time highs by the end of the year. But when you hit January, though, I expect a correction, and that'll be 1, 2, 3, 4, and 5 within the third wave. So the correction, I believe, is going to be a second wave of the third wave. So we'll get probably at 14,200 or higher, and by the end of the year, then we'll retrace back to 13,000 to correct in a 2 of 3, and then when we test the previous 4 to 13,000, we could go into it. We may form a 3 of 3 up, which target as high as 22,000. Yes, 22,000. In long-term bull markets, going back to the 20s, going way back as far as you can on the charts. I've done this before. I've looked at how many times we've had third waves. Each time it's been 1.618 times the percentage gain of the first wave, not 1.618 times wave 1, but 1.618 times the actual percentage gain of the first wave. Actual percentage gain of the first wave is around let's see, 10,000. Actually, the first wave going back to 2009, was around I believe it was 6,000. 6,500, but the first wave doubled in value. So, well, according to my calculations, I have a huge article about it that's still on my website. It's been there since February. But the third wave, if it's 1.618 times the percentage gain, which is the most common third wave, will target as high as 33,346, precisely right in the number. And the reason why I'm calling that kind of target, which may sound completely weird and far out, is because third waves in bull markets are typically 1.618 times the percentage gain of wave 1, not 1.618 times wave 1. And going back to the 60s, I think when the 1945 was the bottom of the wave 2. I'm not precisely exactly sure when that year was, but somewhere in the mid 40s there was wave 2, and the third wave from the 40s to the beginning of the 1970s was 1.618 times the percentage gain of the first wave. So if we travel that distance, my target would be 33,346. And the thing is, though, short term, I believe this is 1, 2, 3. We may test 13,200, even 13,000 to the downside or worse. But before we complete this fourth wave, we could get a 5 or 3 into the end of the year, which could test the all-time highs. For S&P, again, the bears think this is a fourth wave, and then we're in a 5-5 up. They're calling for a 5 of 5, which I don't believe is the 5 of 5, because if this is a fourth wave, it wouldn't be this deep, and it wouldn't encourage the price territory of wave 1, which it did. We actually got well into the first wave price territory, so this is not a wave 4. This is actually a wave 2. I believe this the move from June to now is the first wave of a third wave, and then we'll have a 5-3 up to around 1550 or higher before tracing back to 1400 and a 2 or 3, and then we resume the third wave in a 3 or 3, which could take us to as high as I think it was 3,000 S&P. That was my target, I believe. But I think my target for Dow is 32,000, and for S&P is around 3,000. And a double from here isn't crazy, because we actually doubled from 666 to now, more than doubled. And it isn't a crazy wave count, because we actually doubled before, so it's like no big deal. But my bullish count is this wave. This is wave 1. This is a wave 2. This is the first wave of a third wave, which is probably going to top out around 1550. We will trace down to 1400 and then rally in the 3 of 3, which is going to target 2100 or higher short in the probably the next couple of years. So bear count is this: wave 1 to wave 2, wave 3, wave 4, wave 5, and then a correction back to 1260 minimum. So if this is 5 waves up according to the bears, we'd retrace to the previous 4 minimum, which would be at 1260, but I don't believe that's the count. I believe that we're going to hold around 1410 to 1420 in the S&P, rallying a 5 of 3 to around 1550, and then retrace it back to 1400 by the beginning of the year. And then by the beginning of the year, we'll start the 3 of 3 climb. And that's where everybody's looking forward, at least I'm looking forward to that. Because every Elliott in the world is calling for this to be a 5-wave top, and I'm always against the grain. The thing is that my record is pretty impeccable. It's 80%. When it comes to long-term charts, my calls have been 80% correct, and it's on records. And many charts that I've done, I call bottoms right on the day, within a couple days, within a week of bottoms happening. I do it so frequently, and like, for example, today I called a 2.618 times wave 1, a wave 3, which touched the right on the number. Got a fourth wave right on the number, and then everything seems to, on my website, you'll see, if you're a subscriber, seems to happen right on the number and within seconds or within minutes. And that's how accurate I am. That's how good I am at what I do. If you haven't experienced it, you have to see it for yourself if you haven't visited my website or subscribed. It happens every single day. It's no big deal to me. But it's pretty incredible when you really think about it. But this is my count that I believe that this is the first wave of a third wave, and then we're going to have a correction by the beginning of the next year. But I believe this is the first wave of a third wave, and then we keep entering a 3 of 3 by the middle, probably the second quarter of next year. We'll be entering a 3 of 3 up. But again, short term, I believe this is 1, 2, 3. Probably get a 4 to 14, 10, 14, 15, and then rally in a 5 of 3 until the end of the year. For NASDAQ, we just barely hit the top of the wave 1 within the price, the level of the top of wave 1. So this is too deep to be a wave 4. This is way too deep to be a wave 4. It's a wave 2. So I believe this is I know there's an absent fifth wave. I know that, but you could call this a fourth wave and this a fifth wave. But I'm going by my method, which is very accurate. So if you're listening carefully to what I'm doing and what I'm saying, then you'll understand what I'm talking about. But the bear count is this: wave 1, wave 2, wave 3, wave 4, 5, 3 into a 5, 5. So I think we're gonna top out here, and then drop back to 27.25 in a wave 2. But I believe that this is wave 1, this is wave 2, due to the depth of the move. Because I believe 2900 was 0.382, and he went far beyond that. So this would likely be a wave 2, and we've entered the first wave of the third wave into the 3-3. But as you can see in S&P and Dow, we've actually, if this is a 4 according to the bears, then this is a 5 up. But we encroached the top of the wave 1, which is a big rule in Elliott wave. The fourth wave cannot breach the price level of the first wave, and we actually breached it. And again, this is too deep to be a 4. So bear count 1, 2, 3, 4, 5. My count 1, 2, wave 1 with wave 3, 2 of 3 into a 3 of 3. And for Dow, same thing. Bear count 1, 2, 3, 4, 5 of 5 back to 12,000. Or my count is wave 1, wave 2 into first wave, second wave, and a 3 of 3. That's a wrap.